Hi, I'm Chance Finucane, Chief Investment Officer at Oxbow Advisors. Here's our outlook on the stock market heading into 2025. Investors were bullish throughout this year. The weekly Investors Intelligence Survey tracks the percentage of bulls and bears in the stock market. In every week of 2024, the number of bulls was more than 2 times the number of bears. Only 4 times in the past 50 years have the bulls been more than double the number of bears for at least 50 weeks of that year. In each of the previous cases, stocks had a choppy next year. Another thing to consider is when the stock market has outrun its long-term upward trend. Stocks typically outgrow the economy's nominal GDP growth rate by a few percent per year. But there are periods when investor exuberance and faster earnings growth drive the price of the market far above the century-long trend. The S&P 500 is now above the long-term trend by more than it was at the market high in 2021 and nearly as extended as the top of the dot-com bubble in 2000. The more technology-focused NASDAQ composite is similarly extended. It's nothing like the dot-com bubble in this case, but is near the same high as the extreme valuations witnessed in 2021. We point this out because over the past 100 years, when the price of a stock index gets this far above its long-term trend, a return to the trend line inevitably occurs. One style that performed extremely well this year was momentum investing. This is when you own the best performing stocks of the previous 9 months in the hopes that they will keep outperforming. 2024 was one of the best years for momentum investing in the last 75 years. The catch is every investment style goes through cycles of good and bad performance. And when these rare periods of momentum outperformance end, the underperformance of this style is significant. Watch your recent big winners closely in case their performance breaks downward in a significant way in 2025. One of the surprising things about the best momentum stocks of 2024 is which sectors are represented. You might think it's all tech stocks, but in fact, it's traditionally cyclical industries like financials and industrials that make up more than half of the best momentum stocks today. That makes us wary of adding to these cyclical sectors until the exuberance about these companies returns to a more normal level. Industrial companies are at their highest relative valuation compared to the market in over 40 years. Capital equipment companies have improved the quality of their businesses a lot over the past 20 years, but their price-to-earnings ratio compared to the market is the highest it's been since the early 1980s. That leaves little margin for error if there is any disappointing economic or industry trend around the corner. Industrials are not an area that we're adding to at these prices. Besides financials and industrials, semiconductor stocks are the third area that we're avoiding to start 2025. The past 30 years of revenue data for the global semiconductor industry shows just how cyclical the industry is. We are nearing a peak today similar to 2017 and 2021. In those previous cases, a major downturn in semiconductor stocks began soon after the peak in revenue growth for the industry. Semiconductor stocks are already down about 15% since July. We would not jump in and buy just yet. So what's out of favor and looks more attractively valued? Healthcare, energy, and fundamentally stable stocks. Let's start with healthcare. No one wants to own healthcare stocks right now because of the uncertainty about U.S. healthcare policy in the years ahead. We do not have an edge about potential changes to healthcare policy, but we do know that policy uncertainty has led to a sell-off in the sector during most presidential election years of this century. And we also know that regardless of your opinion about healthcare in the United States, it's very hard to transform the industry. Because of the resiliency of healthcare businesses, in every case that the sector has sold off across the board during the past 25 years, the healthcare stocks have rallied in the year ahead. That doesn't mean you move your whole stock portfolio to healthcare, but we do think it's the right call to maintain your exposure to the sector when the pessimism about the industry is so high. Energy is the next sector we think investors should hold the line and stay invested. For the past 2 years, while the total market has appreciated by a large amount, energy stocks have been about flat. It's caused investors to pull money out of energy sector funds throughout 2024. One thing we know from research is the sectors with the greatest outflows tend to be outperformers in the intermediate period ahead. We are sticking with our energy stocks in 2025. Finally, after 2 great years for risky assets that have left investors less concerned about potential downside, it's the companies with the most stable fundamentals that are now priced more attractively relative to the market than at any time in the past decade. Companies with high stability in their earnings and other fundamental factors go through periods of being very highly valued and then stretches that they are forgotten. Normally, stocks exhibiting these high-quality characteristics trade at a price-to-earnings ratio that's at a 10 to 20% premium to the market multiple. Right now, though, they are trading at a discount to the market. It's a good time to include businesses like this in your stock portfolio. And not all fundamentally stable stocks are in defensive sectors. Examples we own include Visa, VeriSign, and Masco. In conclusion, the expected return for the stock market is below average. Watch out for a reversal in the performance of those high momentum stocks. And for that reason, we're interested now in recently underperforming areas like healthcare, energy, and fundamentally stable stocks. Finally, we are avoiding areas like financials, industrials, and semiconductors to start 2025 until we see the exuberance around those areas recede to more normal levels. If you have any questions or would like to learn more about Oxbow, please contact us. We like to provide the information we think is most valuable to investors. If you'd like to see more of our insights, please subscribe to our YouTube channel.